let's look at the dollar index because it's going down big time. First off, read this disclaimer carefully and do your good deed of the day by liking and subscribing. We go to the Forex market. Well, first let's get a bit of a big picture what is going on here. Huge moves in blockchain, which is the top performing mega trend by a lot. And that is certainly also related to what is happening with the US dollar. So we will look at the US dollar index. Here is the distance from the 52-week low. So basically it is at new lows today. Quite some distance from the highs. We are going to look at the dollar index through the US dollar futures and also the UUP, which is the ETF. Let's look a bit at the seasonality. Let's first go way back in time, 1990 to 2009. You can see that December is a weak month, but January is the strongest month here for the dollar. If we go to our most recent time frame, 2001 to 2020, we see that December is very weak. It is one of the weakest months actually, but January, February are some of the stronger months. When we then look at the charts here, the DX, this is the huge picture, we see that a lot of things have happened to the dollar. Huge rallies, huge crashes, then we had the big rally. But the question is this a consolidation pattern? Because you could make a strong case that, even though, sure, the dollar is down, quite significantly, it has done that bit before. You see this pullback here, very substantial, then we have a strong rally. So it seems like we have a bit of a ceiling here. Let's draw another one. Then we have somewhat of a floor. Let's see how far back we can go. It seems like around, like here, approximately, is where we have the floor. So that's interesting. So that's something that we can relate to. So we do have some two key levels. And if we look at the history of the dollar, it likes to move in big cycles up and down. Hence, given that, there is a very real probability that we could see some kind of bounce when we reach this floor. At least that is what one would expect if this is just basically a consolidation pattern. However, if this is something more dramatic, with us slicing through those potential support levels, then we could see significantly lower levels for the dollar, and that would actually be far more dramatic. Because this is not some random currency, this is the key currency. This is the most traded, and many key commodities are specifically denominated in the dollar. One example, of course, a very infamous one, is the petrodollar. So this is a big deal. So we have found a potential support level. Let's look a bit at the most recent pullbacks. If you look at this one, until we found the floor, that was 420 days. If you look at from this high to the current low, 280 days. So based on the percentage pullback, also when we look at the prior history back here, there's a reason to at least expect a bounce. But the big question is what happens next. Because let's say hypothetically we go down and then we bounce, but let's say we form a lower high. That could really excite the bears. Looking at the RSI, you see here on the weekly data points, we do not like to be oversold on the RSI. That usually triggers some bounce. So that's another reason to consider that possibility. The correlation here with S&P 500 is minus 9%. Very weak. Almost no correlation. Looking at the short time frame, we have a minus 94%. Hence, and you can see also here, the correlation can certainly change a lot through time. That's very important to be aware of, because many people, they have very simplistic understandings of these correlations. So as an example, they think that let's actually look at the correlation here with gold, because that's such a key commodity, and that is the real money, so to speak. So here you see, down here now is the correlation with gold, and you see that it is only minus 69%. So there is certainly a negative relationship, but it isn't like people portray it, but that it's like minus 100%, because that would mean that they do truly move up each other. Looking at the weekly data points here, based on the data at hand, there's no correlation between the GLD and the dollar index. That's interesting. And also on the daily data points here, you see that the correlation has varied substantially through time. Now it is actually on the lower end. It actually has been even lower back here, but it has also been high at times. Here you have a positive relationship with the dollar and gold, so they move up together. So yeah, there's always more nuance when you look deeper, really open the hood. Looking at RSI, you see here, using daily data points, it doesn't like to be overbought or oversold. Those extremes, they usually trigger some reaction. So that's another reason to suspect that the current pullback may be nearing exhaustion. It has certainly pulled back a lot. Yes, and I see. Just for good measure, let's actually look at the relationship here with Bitcoin. The Bitcoin index, here it is. Let's first look at the long time frame. Looking long term, there's a minus 40% relationship, so there's a negative, but not like super strong, but certainly it is negative. Looking at the short time frame, you can see that there currently is a minus 74% relationship. So they don't move like perfectly opposite each other, but there certainly is that kind of a relationship. However, when we go further back, you can see that the correlation, which you can see here, it has changed over time, being as high here as an example as 84. So a very strong positive relationship here in 2017 between the dollar index and Bitcoin. Hence, given that, we simply cannot make some simplistic analysis and say that that if the dollar goes down, then Bitcoin and gold will go up. It isn't that simple. When it comes to any kind of security, there is at least a handful of factors strongly affecting the price. Okay, so certainly very interesting times here for the dollar. So to summarize here, looking at the seasonality, it certainly suggests, based on all the data we have here, that there's a higher probability of a bounce in January. It is historically a strong month. Looking at the charts, multiple indicators suggest that unless the current pullback is some kind of epic, cataclysmic collapse of the dollar, unless that happens, then we have all reason to suspect a bounce. At least a bounce. We have seen, a big rally from the 2011 lows. It is possible that this is a consolidation pattern, a very big one at that. We do have a floor up here. No, a floor here, of course, and the ceiling up here. So it has been moving inside that box. We are now testing the lower end. Yes, so I expect a bounce. The longer term picture is still playing out. Looking decades into the future, then I am actually extremely bearish on the US dollar, and that is basically founded on an understanding of history and the rise and fall of empires. The track record is pretty clear throughout history. They don't last that long. So yeah, looking decades into the future, I'm super bearish, but it could very well be that some world currency will develop. Who knows what will replace the dollar. Whatever you do, of course, try to create a market-neutral portfolio.